Welcome to our first inaugural edition of real estate and mortgages, specifically reverse mortgages.
Yeah, or payment option mortgages, right?
Payment optional mortgages is the phrase that all real estate agents want to use when referring to a reverse mortgage.
Yeah, why is that?
Because of the past stigma that a lot of people have regarding a reverse mortgage. And I think that reverse mortgages in the past, people think of them in a very narrow sort of definition. So as we were just kind of talking before casually, reverse mortgages are very specific to somebody's situation, and they're used in a number of different ways.
Yeah.
So calling them payment optional mortgages, number one, takes away the stigma. And number two, it makes people give a little bit more thought to it of why would it be optional as opposed to just not making mortgage payments.
Right. Well, I think, and then like one thing I've had, you talking about stigma, is whenever I mention reverse mortgages, they automatically go into like what I've heard is bad, so these are not good, and they don't really want to research more into it to see if it's a benefit for them.
Right.
But based on, I mean, that was actually me at one point. Whenever I heard reverse mortgages, I'm like, like I haven't heard good things. And then we sat down and actually had a conversation, and you were able to teach me more about reverse mortgages or payment option mortgages. Like I was just like, dude, this stuff is like awesome.
So full transparency, I was in the same boat.
Yeah.
I was like, don't do a reverse mortgage. Why would you do that?
Right.
I thought that you traded your house for no mortgage payments.
Right.
Like, so you say goodbye to your house and it just let you not make payments while you're alive.
Yeah.
Couldn't have been more wrong. Had no idea of the depth of, what they can do. But you're right. And the number one thing I would encourage everybody watching this to ask is, as soon as you hear that don't do a reverse mortgage or they're really bad, is ask why you think that.
Yeah, why do you think that?
Just why.
Mm-hmm.
It's real simple. What have you heard or what's your experience, and is it valid?
Right.
So that's all I do as a reverse mortgage professional, is just try to determine what they've heard, is it valid, and what was the situation or circumstances surrounding it.
Right, which is partly why we're sitting down today, because we want to share like some of the benefits from reverse mortgages to help people make a decision, and maybe get on the phone and actually talk to a professional like Bill to see, if it's something that would best fit your needs to purchase a home, because you use them as a purchase now. It's not just a refinance option; it's a purchase now, right?
It's the other big thing that a lot of real estate agents aren't aware of, and if they maybe heard of it, they're not exactly sure how it works.
Right. And they are FHA, so they're government backed,
Mm-hmm.
correct?
Government insured. There is no real reverse mortgage. It's called a Hecm, or home equity conversion mortgage, and that's the FHA insured version. It's equity release, basically. So reverse mortgage is just a term that's stuck around from literally the 1970s and 80s.
Yeah.
When this didn't exist.
Right. When it didn't exist.
No, back then they were like just private loans through private banks, and they called them reverse mortgages, and they just were all different versions of it. And then FHA came in and standardized it to allow people to age in place without fear of getting kicked out of their house.
Right.
How ironic.
Right.
And that was the original intent. And then FHA overhauled the program about 7-8 years ago. They tweak it ongoing, but they really overhauled the program about 8 years ago. And that's another thing that a lot of people aren't aware of.
Oh, nice. Very cool.
So made them very safe.
So a couple questions about, I think we just kind of started as far as like some questions that I know I had is, what do you need to qualify for FHA, Hecm, like a payment option?
We just recall it a reverse mortgage for our conversation,
okay,
but just realize that there is no reverse mortgage. It's a Hecm.
Yep.
So that's the other great part, and I hate to sound cliche, like everything's so great, but this is really great. There's very low qualifications. You have to be over the age of 62. One borrower has to be over the age of 62. So I could be 62. My wife is 6 years younger than me, so she'll be 56. And I will get a reverse mortgage the day I turn 62.
Right.
I mean, it sounds like, I'm getting far out there, but it's absolutely true, and there's a whole bunch of reasons for it. And it won't be to just pull money out right away, and it won't be to just skip payments right away either. So it'll obviously be tailored to my situation at the time, but it's a tool that should be put in place for, I believe, about 90% of all people over the age of 62.
Yeah. I like the option for it, especially if you're looking at that as far as like investing or doing like tax benefits. So we talked about that a little bit earlier. Like, what are some of the benefits of utilizing a reverse mortgage as far as like a financial standpoint? You know, as far as like not being taxed. Mm-hmm. You would explain it better than me.
I mean, so we give, sometimes hour, 2-hour workshops on it. So I'll try to summarize. So at the core, a reverse mortgage is very simple. Mm-hmm. It allows you to make the payments optional, mm-hmm. or not make them at all. And that's the part that's very popular sometimes, is not making payments. But making a payment has strategic value. And number two, it allows you to leverage the equity. Mm-hmm. I say draw the equity, or sometimes it's when you're not making payments or making payments, you're leveraging the equity in terms of the overall financial picture. So anything you do draw from a reverse is tax-free. Mm-hmm. So it has, and there's tax advantages to it because you can use the interest as a tax deduction.
That's if you're paying it, you use the interest when you're paying it, you can use interest for a tax. Okay.
Correct.
But when you're taking it out, if you do take it out, it's tax free.
Right. So, and again, not to get too advanced, but that's the growing area of the Hecm nowadays, mm-hmm. is in the financial planning community and the real estate community for purchase, mm-hmm. Because it allows real estate clients to more or less double their buying power. Instead of having to buy for cash, they can buy and not make payments. You still have to pay your taxes and your homeowner's insurance, just like you would on a cash deal. And there's very low qualifications. So just getting back to that real quick, you have to be over the age of 62. You have to have equity in the house. So, again, about 50% equity is a good rule of thumb, for somebody. And they're not credit score driven is the big thing. So I think for real estate agents, when you have a client who didn't qualify in a conventional mortgage, what are you going to do? A lot of the times
you go a cheaper house.
The cheaper house is really the only option.
Yeah.
But, that's not always the option for the client.
Right.
So it allows you to take some of those buyers and bring them back and make them better buyers without having to,
pay the extra monthly payment,
exactly.
monthly expenses, and all that stuff like that. Mm-hmm. Yeah, because that's like one thing that I've ran into with some clients, friends, family. Whenever they're getting out of their house, some of them want to just get out of the neighborhood for a certain reason, and mm-hmm. they want to buy a nice house. They want to live in like their forever home for the rest of their life. Mm-hmm. But that usually means that they want all the nice finishes, something that's going to be there for a while.
Right.
And for them to do it, usually it's an increase of price point from what they're selling to what they're buying. So they're able to take that equity they have, let's assume they have it paid off, mm-hmm. they can just use a portion of that to buy a better, bigger house, mm-hmm. that they could live in the rest of their life, and then the rest of it they could use to possibly reinvest it, or just put it all towards the house if they wanted to or not.
Yeah. Again, it applies to situations, but just in general, we call them the upsize or the downsize or the right sizing.
Right.
It depends on future planning for spouses and, those situations. But it all ties into liquidity and cash flow for the client, because that's what's most important in retirement.
Yeah.
It depends on the person's goals. So people use reverse mortgages to increase the net worth that they're leaving for their heirs.
How do they do that?
It usually involves other assets. If they want to do it through the house, it involves those optional payments because they can build equity more efficiently. Mm-hmm. So I'm saying a lot of things that, hopefully are sparking some interest, but it's not just what it always appears to be on the surface.
Right.
So we can break those down and kind of go into each individual scenario, mm-hmm. But those are the big ones.
But I mean, probably the best thing is like we're kind of sharing like possibilities of using this money for building investments, using it in a way that's going to help you prolong the life of that money for you and for your family.
Yeah.
And if this sparks like an idea for you as far as like something that might benefit you, it's worth getting on the phone call with a reverse mortgage professional like Bill, just to actually have that conversation to learn more about it, right?
Yeah.
So,
absolutely.
Because we could go in like, there's so many different scenarios, so we could go in like little bits and pieces all over the place, but just knowing that this is a possibility for investing, period, and utilizing your money the right way, it's just like worth a phone call, basically.
Definitely. I always consult over the phone initially, and then, I have offices and I make house calls.
Right.
And it's all free of charge. I'm happy to do it. I do spend a large majority of my time just educating people. So please, use me and, use Nate, anybody who needs a good real estate agent, reach out to us, because the agent also has to have a good idea of how the program works from a real estate standpoint.
Right. And would you recommend like a financial advisor to be involved with this too?
Sure. To be frank, when I do reverse mortgages, they typically involve not only the real estate agent, if it's a purchase situation, but the financial advisor, the estate attorney. So I deal a lot with lawyers, the CPA a lot of the times, and then of course I encourage kids. So that's another thing that some clients are like, well, can I call my kids, or my kids will have questions? I would welcome them to be part of that conversation.
Right. Yeah, and we talked about it before, like there's been times we actually had a conversation with the kids and they're like, they just want their parents to do the thing that's going to help them financially for the rest of their life, right?
Absolutely.
And these loans are a possibility for them.
And the number one thing I hear is, oh, I didn't know that.
Yeah.
So.
Right. Do you have like a story of like a client that you helped out in the past that might resonate with some people out there? As far as like using this and like utilizing the money in a certain way that it better set them up in whatever situation they were in?
Sure. I have a lot of stories for almost any situation, but the one that's coming to mind is it was a referral from an attorney, a CPA, and she was single, and she was living in her house, and she was very concerned
about... Wait, the CPA or the client?
The client.
The client, okay.
She was very concerned with keeping her house.
Right.
Because it was outdated. It did need some updates. She had a current mortgage. Paying that mortgage clear into retirement was going to utilize at least a third of her monthly cash flow just to make those payments. Forget about living, forget about upgrading the house. And she just frankly wasn't going to be able to afford it. She did have some asset accounts, and she was facing liquidating those asset accounts. So what we did is we put the Hecm in place, allowed her to have some money. She put the strategy of making payments behind it. So this is really powerful.
Right.
So not only was she she didn't have to make full payments, and if she wanted to stop, she always has that option to cut those payments off whenever she feels like it.
Right.
But she was going to continue to build equity in her house, take the money back, slowly pay some of it back over time. There's a growth rate to the line of credit that she has, so she guaranteed some more future liquidity. She reduced her payments on her own, so she was paying less per month. She did draw some money to make those improvements, and she basically sent me cookies and flowers and a card and thanked me for allowing her to keep her house in retirement and not have to move.
Right.
So
that's awesome.
Yeah, it's a good combination of things.
Yeah.
But it took education, because her first initial reaction to a reverse mortgage was, oh my gosh, now I'm going to just lose my house and equity.
Yeah.
And now she sees it. I'm actually going to see her again in another week, because you can refinance in a reverse mortgage and recast that line of credit based on future appreciation.
Oh, really? Nice.
And the costs are reduced and the whole 9 yards. So,
oh, nice.
Yeah, she's excited.
That's cool. Yeah, and I like a story for me. I ran into an individual a while back where he was going to lose his house. Like he was barely making enough money to pay his payments, plus put food on the table. And I was like, man, reverse mortgage, like at least talk to somebody and like get some information about it, because potentially for me, like from what I heard from the situation, he could have been able to refinance the house. Oh yeah, and it was going in foreclosure too. So he could have refinanced the house, did the reverse mortgage, probably took out some equity to kind of help support him with his life, but also have those payment options if he wanted to pay it off or not. But he would also be able to do some like updates to the house, which there were some updates that needed to be done to it as well. And he would still live in the same house for the rest of his life if that was, the option. As far as like, I didn't deep dive into the rest of his finances, but to me it looked like it was a really good option for him.
Right.
And that's kind of like an extreme, situation. But
Sure.
there's also like kind of going back to like the finances and making it more like an investment, like a option for them is a possibility too.
Yeah, so I would say about a third of my clients are, what we're talking about, keeping their house in a dire situation. Another good third of that, or maybe 40%, is more of the, we're okay. We could keep treading water, but maybe we want to really enjoy our retirement. Give the kids their inheritance maybe with a warm hand. That's the phrase they use. But have some control, be able to see the results of, helping your grandkids or your kids, while you're around.
Right.
And then the other percentage that's growing really is that more advanced financial tool. I always make the comment, why would you go and plan retirement with not even thinking about your home equity?
Right.
Just how it can be used.
Right.
If you want to leave it to your heirs through your house, well, then that also involves some strategy. So,
right.
Not just pay it off and pray that, everything works out at the end. That's how people lose, net worth.
Right.
So,
yeah, that's good. And you mentioned like the other day, like there are people that like higher price points that were using it for that investment strategy.
So there are jumbo reverse mortgages.
Up to how much?
3, 4, I think 3.5 million right
3.5 million.
Yeah, and they go down to age 55.
Oh, really?
Yeah. So those are not the Hecm. Those are not the FHA insured reverse mortgages, but there are newer jumbo reverse mortgages that people use for high dollar amounts for more advanced tax and financial planning, like Roth conversions and preservation of assets under management strategies and stuff like that. That gets a little bit more advanced. So,
but that would be financial advisor and you involved in.
Definitely financial advisor, but well, I shouldn't say definitely. I should say the level of those clientels, typically they're pretty educated on a lot of things. So I have to be ready to advise in those situations too.
Right.
So,
yeah. That's cool. Yeah, that's and I swear, like the reverse mortgage, I see people that are wanting to purchase and they just, I don't know, I see it as a good option. So
yeah, it's unbelievable. I think. I mean, even if you, and this is a common question. So what happens if I have a reverse mortgage? That means I have to spend the money. I'm definitely losing equity. No, a reverse mortgage is just a regular mortgage.
Yeah.
So if you have a zero balance on your reverse mortgage, sure, it can be there as a safety net. But if something happens to you and you don't have any mortgage balance, it's just like it wasn't there to begin with. Your heirs inherit 100%.
Yeah.
So
that's good.
you never want to go below $50, on
Right.
the mortgage balance. Just keep the $50 there. So
yeah. Nice.
Thanks.
Well, cool. Anything else to add?
A whole bunch of things. I think that, I enjoy doing this and I enjoy educating, and as people see it, and if you have questions, just send questions to Nate or myself directly, and we'll talk about it on future videos.
Perfect. Yeah, and I'll put both of our contact information, both like in the post or in the description, because I'll put this on YouTube as well. But if you have any questions, please reach out to us as far as the real estate side and the reverse mortgage side. Contact Bill. So I appreciate it.
Awesome. Thanks for watching.
All right. Thanks.